Hello, everyone. Welcome back to the 19th episode of the 2026 Portfolio Challenge series. Earnings season has been continuing, and we've gotten a bit more data that we like, and there's more coming up. So let's get right to it. Here's just the performances. We can see that the main portfolio is doing a bit better. The deep value slightly less because of Micron dropping a bit, and then the rest of them are slowly catching up to where I want them to be. Disclaimer, this video is not financial advice. Okay, so let's go over the itinerary. I'm going to start with some of the watchlist news. I bought some more ELF with the earnings coming up. I took some profits on Micron. I bought Celsius again, and I opened my first position in APH, Ampheron Technologies. And let's get right to it. At the end, we're going to go over the portfolios as performances instead of at the beginning like usual. So if you want, you can just skip ahead to that if that's what you care about. So let's start with ELF. Currently, with these earnings and how everything's going, my price target is at 75 for the year. Obviously, it's a huge momentum stock, so it can go up to 120 pretty easily, and I won't be surprised. And also, if it stays at 55 to 60, I also won't be surprised because it is consumer discretionary, and the consumer discretionary isn't doing super well right now. Yeah, so what I'm looking for out of these earnings is for a larger ratio of operating income to revenue. So the past few quarters, here, let me just pull that up really quick. The past few quarters, it's been pretty hit or miss. You can see here in quarter 2, 2026, it had 7.72 million in operating income compared to 343 revenue, which isn't great. And here I mapped out every quarter's ratio basically. And we can see that it's usually around 0.14 to 0.13. And when I plug those numbers in, we do get a roughly 60 to 70, high 70s price target. So what is ELF? Obviously, well, most of us know what it is. It's a beauty company. It's been hit pretty hard due to the war, high oil prices, high imports, high tariffs, etc. And it's generally been out of the radar for a bit now. The last I've really heard of it was a few months ago, I think, like a couple months ago. And I think that once it has really good earnings again, it'll pick momentum up. Now, historically, it hasn't done great right after earnings and during earnings. You can see here that after almost every earnings period, it takes a small dump for a bit, even if it has really good earnings. But it does recover pretty quickly. So this one it jumped, but everything else is basically dumped. So I think it'll be fine this time because it is basically at its minimum. For the past, almost year and a half now. So I think it'll be pretty good. And then historically, it does have huge movements. Yeah, I already talked about that. Lots of momentum, and it's significantly under my price target and way under Wall Street's target. So Wall Street has a target of, I think it's going to be fine. I've got it pretty huge in some of my portfolios now. So now next up, I did take profits on Micron. I sold at exactly 800. When it touched this week. I am super bullish on it, and basically based on last week's reasoning, which I've got right here, you can pause this. I'll count to 1, 2, and 3. You can pause that and take a look and read about it. But what I was saying is that my new price target's significantly higher, almost double what it was. So it's 1650 now compared to 850 at the beginning of the year, and now 1150. But with the huge run it's been having and all the changes in the Fed and the war still going on and all that, I just wanted to de-risk. So I took some out, rebalanced. It's now back down to right around 10 grand in both my choice value and my main portfolio. And the deep value I haven't sold because I'm not in charge of that one really. It's just Matt in charge of that one. So yeah, I just said, try not to decide my luck. And if it does go back up to 1650, sure, fine. I made another 10 grand. But I think that de-risking is the right choice to do right now. Yeah, so what I said, if you want to read what I did last week, here it is again. You can screenshot this. That's perfectly fine. I don't care. You can read it, pause it, whatever you need. And then here is Celsius. So Celsius, it's at 30 right now. This is a stock that I was buying it at 50. And then I exited it because Micron was lagging behind SanDisk, and I had a really good feeling about Micron when they were both 35 and 350. So I was like, Micron probably is going to move quicker than Celsius, and I was right. So now I took some of the profits from Micron and I bought back into Celsius at 30. I actually bought back in at 20.8, but it's right around 30 right now with a price target of 48. And the move was made for Micron, and with the rebalance, I now have room for Celsius in my portfolio again. There's not too much to talk about this. Nothing really has fundamentally changed. It's still a good price. It's still got decent upside. Wall Street still likes this stock. Not much to say about that. We can just look at it really quick here, and we can also do here. Oh, it's got a report. What do they say? Okay, they've got fair value at 40. Wall Street has it at 62. Take the even of that, and it's 50, and that's right around where I have it. Not that I really use those, but it's nice to know that other people think very similarly. And even Morningstar, that's a 30% upside. Nothing wrong with that. So Amphenol. So this one, it's a new stock for me. It just showed up on my radar this week, to be honest, because the huge revenue growth and the company pushed past the 10 billion mark. Great operating income. It's got a very wide moat, high innovation, great expense management. It's got basically everything you want from a company. The only thing it doesn't have is that the price target's kind of low compared to what I usually buy. I like to buy it at a price target of 30%. And this is, around 20% right here. So just a little bit about this company. So it's a fiber optic connectors company, and that's used a ton for data, internet, Wi-Fi, but also in data centers. And with the huge build out for AI data centers, which require connections of all these kinds, and basically everyone's come to the conclusion that fiber optic is the way to go. This sector, I see huge growth, and it's already had pretty huge growth this year, but I think this dog is kind of lagging behind. So I am very bullish on it. Wall Street's even more bullish than I am. And I think Morningstar is the most bullish out of all of us. Yeah, here's just the report. I was just reading it. I just don't see a downside to quote unquote gambling on this stock, if that makes any sense. I see very little downside risk to this stock. It's got good PE, good forward PE. This is healthy. It's not great, but it's healthy. And my projections, I'll just pull them up really quickly. And these are using Wall Street revenue projections, by the way. Yeah, my projection has it at 148. And that's obviously with the expense ratios staying the way they are, but they have been improving over time. Let me just map it out like I did for Celsius really quick. Yeah, so over the past year, you can see it's been improving a bit, and then it kind of slowed down. I expect this is a one-time deal, to be honest. Let me just make sure. Let's go quarterly. Yeah, other operating expenses. This is probably just them investing in some new technology or something. And really, if we add the 116, the 117 to this, we get 17. That's a 50. 1950. If we change that to 1950, I actually do usually do this. This isn't just for the video. I was just in a rush to make this. So 1950, and we get to the same 27% ratio, which is good. That bumps this up to 152. And I have a feeling that when it keeps going up, they'll just get more efficient. So I think that's about it for this week in terms of my news. If you guys want, here's the changes I made in my portfolio. So this is the 2026 main portfolio. So yeah, just ignore that. Gut feelings, value picks, high IV. I like the stocks that move a lot, that have momentum. But also, stocks that are undervalued based on what I think they should be. And so you can see here that I sold Micron and I bought a ton of ELF. I also bought a lot more Meta just because I did get more bullish on it. And here are my profits and losses. Thank you, Micron. Thank you, SanDisk. You guys are saving me. right after I lost all my money on Hood Novo Nordisk. And hopefully this elf right here is going to bounce back pretty soon. Here's my deep value portfolio. So these are pure forward PE plays, basically, with some guardrails. Nothing's really changed. I didn't make any changes. So if anything changed, that's just the company's growing. And here's my profits and losses. Obviously, SanDisk and Micron somehow made it in here. Thank God. I don't know what luck I'm using here, but I'll take it. And then everything else, you know, it's just normal. PayPal I'm kind of annoyed with, to be honest. Then there's the choice value portfolio, which is my value picks only. And this is very similar to my main portfolio because I'm a value investor for the most part. And again, this is weighted by conviction and IV. We can see here that Hood didn't change really, and I replaced ELF with Micron, and I put some money more into the other ones as well. And here's my profits and losses. Again, Micron and SanDisk are basically covering everything I need, and Celsius hopefully will start to recover. Everything else I think I basically sold. And finally, the meme stock portfolio is at, I think it's like 93K now. We were at 60K or something like that a few weeks ago. So I'm very happy with this. Robinhood isn't moving much, but we're selling a ton of covered calls on it at pretty high IV. So I'm excited with this one. And I think that's about it. So thank you guys for listening. Good luck this week. I'll see you next week. Bye-bye.